Hey everyone, good weekend. Here is your market minute for Saturday, the 20th of April. All right, we're starting to get a little bit of panic into the markets as we've come off the all-time highs up at 52.64 on the SPX cash index, and everybody's wondering, where is the bottom? Where are we going to bottom out? Where is the bottom of this corrective move? Well, there's a number of techniques that I use, but the number one thing I'm looking for is what's called confluence. Now, confluence happens when you are able to stack up various edges against each other, and they add up to a much more robust support level. The first thing I'll usually do with situations like this is to understand where likely landing spots are through fib retracements. So if we draw from the bottom of this entire weekly swing to the top, you can see that we've got 23.6, 38.2, 50%, 61.8. The ones I'm most interested in are 38.2, 50%, and as far as 61.8. Now, speaking about confluence, what we can do is we can take the smaller swing of these two, which is the one from the beginning of the year, and draw this one up and then look for confluence once again. And what we're going to find is we're at a confluence point right now, but there's probably even a stronger one, which is at the 38.2 major and the 78.6 minor. And that comes at 4,800. So from a fib perspective, probably the best level that we're going to see if we don't see a bounce from the current level right underneath 5,000, which comes down to about 49.65 or thereabouts. So if we don't see a bounce by Monday, if it continues lower, then the next level is very likely at 4,800. And that confluence also will strengthen as the 200-day moving average continues to go higher and eventually might actually join that confluence of fibs. Now, the second thing I want to look for, besides the fibs, is what's called a swing test. Swing tests occur when we have something like this, the former highs from back in 2021 coming along and forming a relative high. Remember, the point of support is former resistance becomes new support. So a lot of times what we'll see, even during the day, is something which is resistance gets broken through and then gets retested from above as support. And so that's called a swing test, and that would occur at 4,800. So once again, we have more confluence now starting to pile up at the 4,800 level. Next thing I want to look at, and I've moved over to TradingView because I like how they present this, but this is called volume profile. This is volume at price. And what we're looking for is value areas of volume at price. Obviously, we had a big value area up in this level, and that's been broken through. So now what we're looking for is other value areas. Now, this is not going to map out perfectly to the price of the SPX because of the way that they incorporate dividends and so forth, but we're going to be looking for, once again, this big value area down here, which is just underneath 480, which maps out to 4,800. So we're starting to see the same things again and again. Now, we do have a minor value area here at about 4,900. So we might see some type of reaction at 4,900, but I would expect to see a major reaction if the price is able to get down to 4,800 on the full S&P. Last thing I want to look at here is the fractal view of the S&P 500, where we have the monthly chart, the weekly chart, and the daily chart on the right-hand side. Now, what it's showing is that we do have an exhaustion level down here at the monthly chart. So that is consistent where we've seen that before. Typically, we have a month or two of red candles. And that allows the monthly chart to be able to recharge. It can't go forever in one direction. Same thing here for the weekly chart. The weekly chart was in exhaustion. Now it was fully charged and is ready to supply energy in whichever direction. However, at the same time, we have the daily chart, which is now approaching exhaustion to the downside. So this shows the linearity of the trend. It's been very linear now for the past week, 5 straight days in a row, breaking to the downside. we are approaching the limits of how far this can go. Not quite yet. We'll have to see how this plays up Monday or Tuesday, but certainly by the time that we get to 4,900, this will be showing some pretty severe exhaustion to the downside and likely to see some type of reaction back up, even if it's to a relief rally. So everything for right now is pointing out as around 4,800 is being the floor of support if the price is able to get down there. There's no guarantee the price will even get down there in the first try. What I'm expecting is I do not expect to see a slingshot move from here. What I am expecting to see would be some type of bottom, short-term bottom, whether it's at 4,900, maybe a stretch to get down to 4,800 on the first try. That would be extreme, but irrespective of how it gets there, probably setting up a complex move with a lower high and a lower low to finish off this corrective move, probably sometime into either the latter part of May, early June, before we're set up for a possible summer move. We'll see if that is in the works for things. Remember that reversals start from the inside out and they propagate higher. For this to move into a monthly downtrend, there's a lot of things that have to happen first. We have to put in a lower high in the monthly chart, lower low, and then we have to rally up to a monthly lower high, lower low before this is going to release. So understand that this is very, very, very early into the corrective process. So don't panic. Look to buy weakness, look to sell early strength, and we'll get through this thing in the next couple of months. Thanks for listening. We'll catch you in the next Market Minute.